I'm joined now by Simon Rose from Save Our Savers. Simon, thanks very much for coming onto the programme tonight.
You're very welcome.
How hard are things for savers today?
They're appalling, it has to be said. We've had 4 years of record low base rates of 0.5%, and, I thought 6 months ago things couldn't get much worse, but the new scheme Funding for Lending, designed to get the banks yet again to lend, yet another scheme to try and get them to lend money, is actually meaning that the banks and some building societies just feel they don't need savers' money anymore, so rates are being cut even more. It's absolutely horrendous. And, for many people who may have tried putting a little bit of money by throughout their lives, or people, for instance, who are retiring and having to buy annuities and who will stay on that fixed income from the rest of their life, the current situation is absolutely appalling.
So, let's think about those people who are coming up to retirement age now as well, and it's not to worry them to death, but it's to give them some help. What help is available, if anything, to say, well, listen, you've been prudent, you've worked all your life, you've put your money away, but you get no return on it now. As you say, possibly you're not going to get any return for the foreseeable future. What can we do?
It's awful. The only thing I can suggest is that many savers don't notice that if, for instance, they've gone into an account that has had a bonus rate, that after a year probably that rate will drop out and it will go from being perhaps last year's rate of 2.5-3% or whatever. That rate could be very, very low. It could almost be 0.1% or lower. You must at least check that what savings you have are earning the best rate you can get. It's something Save Our Savers, we're going to have something soon, I hope, to help people do this. We're not quite ready there yet, but there are ways. You can go online, you can find these rates. So whatever you do, make sure at least you're doing as well as you can. The problem is, of course, that banks in particular are very keen not to let you know that you're getting a dreadful rate, even worse than the current.
So, what do we do, Simon? Do we shop around, or do we say, tie your money up for as long as possible in what seems to be the best deal?
Well, it's certainly the case that if you tie your money up, you will get a little more money. There's not as big a differential as there used to be, it has to be said. So you have to make the decision. And although in theory, cash savings is something with very low risk, you are taking a risk if you tie your money up and interest rates then go up. Of course, everybody in the market says that's not going to happen. The Bank of England say that's not going to happen. But when they are coming up with such extraordinary ideas as negative real interest rates, it is quite clear they have lost the plot completely. They are talking down the pound. And at some stage, it's perfectly possible that there will be a truly serious financial crisis caused by all this. And if we then risk the pound really going into free fall, maybe interest rates will have to rise quickly. But that's not a situation any saver particularly wants, because it's going to be utter chaos.
Is there any one sector of society that's hurting the most?
I think, by and large, pensioners tend to be. I mean, savers tend to skew towards the older age range, mainly because, as you get older, you tend to think more about how you're going to protect yourself when you're not working anymore. And so it's certainly pensioners who are doing the worst. I mean, there are many people there was a survey last week, many people who would like to save but simply can't afford to. And the problem is, savers are suffering from low rates, but we're all suffering from inflation. We have a Bank of England that is supposed to keep inflation at 2%, and yet in the last 47, 48 months, it's been above that rate in 40 of the months. It's been above 3% in 28 months. So with wages, even for those who are still working, rising so much less quickly, if at all, than inflation, we're all being squeezed. Now, if it was for some great end, if it was true that the economy now was growing because of what the Bank of England had been doing for the last 4 years, then perhaps we'd all think it was a worthwhile sacrifice. But it ain't growing. The only people really who've benefited, some people perhaps on variable mortgages, but by and large, all this has gone to help the banks, and the banks have not reciprocated. They're not really lending much more. People are not actually being able to borrow money from the banks at lower rates than they were before. They've just increased their margins. And, everything the Bank of England seems to do and the government wants to do is to encourage the banks to lend more money. But we got into this mess because we borrowed too much, so it's utterly nonsensical.
We often hear confidence. That's one thing that we often hear. So what's going to make me, man on the street, confident to go out and spend what money I do have, my little money I do have, maybe in an ISA that's not paying me much back, maybe in an account that's not giving me much return, maybe that I've got stuffed in some drawers somewhere that I think, well, actually, it's better off in my drawer here than actually taking it to the bank. What's going to give me confidence to go out and spend that money to get things moving again?
Oh, you see, that's exactly right. With times as weird and hard as they are, you don't want to do that. You want to hang on to what you've got because you don't know what's around the corner. And yet, all of this started with the Bank of England deciding if we cut base rates to 0.5%, it'll make all the savers go out and spend money because there's no point in hanging on to it. But they can understand theoretical textbooks. They're all very clever. What they don't understand are human beings. And that isn't how human beings react. They think, hang on a second, if I was getting 5% of my money, I'm now only getting 1% or whatever. Well, it takes me 5 times longer to get the same return. I'd be foolish to go out and spend because who knows whether I'll be able to get some money. Psychologically, they have got this completely wrong. And what's most upsetting is that there have been studies done in the States that they've taken income away from the people who were spending before. So something like £200 billion has been taken away from the people who had it, the savers, who were getting interest. People who might then be actually going out and spending money in the economy, they now are too frightened to spend. And at the same time, the people who got heavily indebted have seen the writing on the wall, and they're pulling back because they're terrified as well. So they've created a completely zombie-like economy with no prospect at the moment of us getting out of it.
That's heartwarming news at 40 minutes past 11 o'clock, isn't it? Simon, thanks very much indeed for coming on the show tonight.